It's okay. Eric Rosengren, former Boston Fed president, now a visiting scholar with MIT's Golub Center. And Eric, we got some more numbers. Everything is headed, looks like, for at least a September cut. You say that the Fed should not cut. Why?
No, I actually think that the Fed probably should and probably will cut this September. So I think things are well aligned. Inflation has come down.
So you didn't say that he also said the Fed should not cut interest rates before the election. So you didn't say that. I'm sorry, I read it. I actually took out something else and didn't read, but I left that in and did read it. So anyway, never mind. Yeah, but okay, then let me get to the next question. So Rick Santelli was just talking about a quarter point. Does anything improve? Does that really do anything? I mean, it's a sign of a trend, obviously, and it's a sea change. But does it help people who want to buy a house? Does it help people who are getting a loan? Does it really do that much?
So as you know, 25 basis points isn't much of a change by itself. Normally, the Fed doesn't move in 25 basis point increments and then do nothing after that. So I think the market is telegraphing that they expect a series of cuts over the next year and a half. So the first cut is indicative of conditions that now more easing is likely. I would say the market is implying a steeper rate path cut over the next, through April than I personally would expect. The Fed's been pretty conservative in terms of wanting to be sure that they're well on their way to get to a 2% inflation target. And inflation's still a bit higher than their target. So using the Fed's preferred measure of core PCE, we're at 2.6%. So there's still a bit of a ways to go before we get to 2%. And there's a lot of uncertainty about what exactly the inflation outlook will be next year. There's a lot of geopolitical uncertainty. There's uncertainty about what fiscal actions will be. So I think the Fed's going to move pretty slowly, and I would expect at the press conference, the chair is going to highlight that they're still looking at the data at each meeting, and they're not going to really provide any forward guidance.
There is a political backdrop. Net, should the 10-year yield be headed higher because of the prospect of tariffs or the prospect of cutting tax rates that might be in a second Trump administration without cutting spending commensurately? Is there a sign that inflation will have a good chance of coming back if Trump becomes 47, not just 45?
So fiscal policy matters. So as you think about what the rate cuts may or may not be in 2025, it does depend on what kinds of fiscal actions you expect. So if there's very significant tariffs, particularly if they're matched around the world, that would make it more difficult to achieve a 2% inflation target over the next year. That might cause the Fed to be more reluctant to move aggressively until it gets a better sense of what exactly the tariff situation is. If you end up deporting a lot of individuals that are working in construction and service jobs, that could cause wages and salaries to not continue to go down, consistent with a 2% inflation target. So the Fed's going to want to see, to some extent, what actions, how much is rhetoric right now and how much are actions that are actually going to be taken. So I think a cautious approach, both because inflation's been coming down relatively gradually, but we've also had some false starts, and fiscal policy will matter. And if fiscal policy causes there to be an inflation shock, then the Fed needs to react with monetary policy to offset it.
Eric, curious to get your views about what former President Trump said about if he becomes the president as it relates to Jay Powell. Seemed to suggest that he would like to keep him in place until his term ends. But if you really were looking at some of the wording, there was an implication that if he didn't do what the president wanted, that maybe he would fire him early. There's obviously a big legal debate about the independence of the Fed and whether the president can do that.
Yeah, I have no idea about the legal implications. I think it's unlikely that there'd be much benefit to doing that, and there'd be no reason not to have him finish off his term. So my baseline forecast would be that that action wouldn't be all that supportive of what either president would probably want in order to achieve a soft landing for the economy.
We've sort of heard, Eric, anecdotally, Eric, that we've kidded about who would want that job, and I think we've heard that maybe the chairman's watching and he's like, exactly, or his wife, you know. So I mean, if someone said to me, you know, we don't want you anymore, really? If I were to, I mean, he's doing it for us. When you think about it, nobody needs this. How much does it pay? $10 million a year? What's it pay, Eric, to be Fed chair?
450,000. What is it, Eric? I don't know what the number is anymore. I think it was about 450, right? Maybe less.
No,
yeah.
It's less than 450.
Yeah.
No, you know who got 450? New York. If you're the chair in New York, you get more.
Really?
Right? Isn't that right, Eric? I think the chair in New York gets more than the actual chair in D.C.
That is correct.
Yeah, and you're still not going out to dinner every night in New York.
Brookings has a paper on what happens if Trump tries to fire Fed Chair Jay Powell. There is some precedent that that the Supreme Court has taken up a case. The only time this has happened was when FDR actually fired someone who was at the FTC, the Federal Trade Commission, over policy differences. That was back in 1933. Humphrey, the guy this happened to, sued for reinstatement. He died while the litigation was pending, but the Supreme Court still took up the case, and the estate won. So they said you can't do that. The Supreme Court would have to decide whether the same logic applies to the chair of the Fed's Board of Governors. But that is the closest legal precedent there is for it.